Good afternoon, ladies and gentlemen, and welcome to the ULS Technology PLC results investor presentation for the year ended 31st of March 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply click Q&A, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Jesper Fogstrup, CEO, and John Williams, CFO of ULS Technology PLC. Good afternoon.
Afternoon, and thank you for that introduction. And thank you to everyone that's joined the presentation. Really excited to be here today. I'm here with, as our host mentioned, John Williams, our Chief Financial Officer. I think maybe before we get going into the main deck, worthwhile just calling out some of the rest of the senior leadership team that's joined us recently. And then I'll give a couple of reflections ahead of diving into the deck as well. So first, we've had Ed Mardell join us as CTO, as Chief Technology Officer. Ed joined us back in June, so last month. Ed has previously had a lot of domain level experience roles in property, obviously with a technology angle to it. Previously took a business out from GMG, backed by LDC, and exited to Supla, where he served the last couple of years as Chief Technology Officer. So delighted to have even Ed join the team and already making great progress in our technology organization. Second, we had Simon McCulloch join us in June. Simon is now the Chief Commercial and Growth Officer. I have worked with Simon in the past. He was my commercial director when I was at Compare the Market, and followed me very briefly to HSBC, where he led the global wealth and insurance business in the digital channel. And before that, very early in his career, he spent 10 years with Countrywide before joining Compare the Market at a very early stage. Jamil Lalani joined the business in September last year, so ahead of me. Jamil is building our product capability and product teams, which is taking great shape and building into our strategy right now. So really excited about Jamil. Joined from Money Supermarket, money saving expert. Started his career actually as a management consultant with Bain before spending time with Marks and Spencer. So 3 new additions to the leadership team, and we're obviously building bench strength below these 3 people as well. So let me take a moment to talk a little bit about what I've observed and why I joined ULS. I've been here about 5 months now. I joined at the very end of January. And the reason, sort of the attractiveness for joining the business, was really that notion that the current model for home moving and owning is fundamentally broken. I'm still to meet anybody sort of high-fiving in the street about their move experience. Movers, consumers, they dread moving. In fact, you could argue as a good sort of onboarding activity for myself, I decided to move home in spring of this year. And although I had a very nice and very capable conveyancer, it was nothing like what a digital experience could be of home moving. And at very many times did I find myself out of the loop. And that's what consumers are telling us as well. They don't have visibility over what's happening. And that moment where they dread moving, they will hold them back from really engaging. It will pull up the barriers, and they won't really entertain sort of moving. There's many people that sort of quote that period between deciding to buy or sell and moving in being full of stress and anxiety. And we'll talk about that a little bit later in the presentation as well. Conveyancers too. Spent a lot of time with several conveyancers over my time with the business and before. 30 to 70% of conveyancers' time is typically the period or time percentage of their day that they quote spending on responding to inbound chases, whether it's for the consumer, whether it's from the real estate agent or the mortgage broker or whoever else it is, it's just broken. Everyone are not really up to date with what's going on in with their case. And that's really fundamentally why I decided to come to ULS, to make home moving better for all stakeholders, build the home moving platform for tomorrow. And what the last couple of months has taught me is that this area is ripe for advanced automation, really ripe for data-backed experiences, true customer out design and thinking. And I'm incredibly excited about the opportunities we have ahead of us. We have a good base in our established e-conveyancer business with strong brand equity and a good opportunity to grow both channels, new channels outside of our stronghold in mortgage brokers and first-time buyers, in lenders and in B2B2C sites, but also the penetration into the existing channels. Digital Move is at an early stage, but consumers score their experience well. More than 70% of consumers that's gone through or had a case go through Digital Move scored either very good or good experience. So really nice early sign that we are doing the right thing. But it is the first step of many, and we'll talk to that a little bit later in the presentation. As part of our strategy, we will build on both over the coming years. And it's fair to say that we've seen some other players solve for slivers of the experience, whether it be from an agent perspective or a broker perspective, or some of the conveyancers that build digital front ends to their businesses to be more effective. I think we've seen nobody that's looked at this from a consumer lens and from an end-to-end perspective. So the opportunity is vast here. We'll scale e-conveyancer, we'll really double down on that business. We'll grow Digital Move with more stakeholders, as an example, estate agents, and we'll build the best consumer-focused, data-driven, automated way to do conveyancing, freeing time up for conveyancers so they can do what they do best, help customers get through the moving process. As we launch, scale, and enhance that platform, for most transactions, I really don't see any need to go anywhere else. We'll build a great product at a good price point that consumers, conveyancers, and other stakeholders love, and a significant opportunity in taking market share on the back of that. I'll be wrong for me not to say that we're early on the journey. However, I'm confident that we will deliver a great product, but not everything will go to plan. And the new leadership we have in place is well versed in operating flexible and agile and being able to pivot where that's needed. But we have a great team, a great opportunity to go forward with learnings, and we'll do that. Also, we're hiring, and happy to I know some of the questions that was pre-submitted was on hiring, so we'll be happy to answer those later on. But that takes time, and we're in a market where there's a lot of demand for talent. So that is that's one area where we certainly spending a lot of time making sure that we have good conversations with candidates and get them on board. So I see what we are building as being super transformational to home moving, and the benefits will be broad, not only for this group, but certainly also for movers having a greater experience, conveyancers, and other stakeholders that I talked to early on. So what we'll do today is I will talk through the highlights and strategy before handing over to John to talk through FY21. So let's look at what we've achieved in the last financial year and also some operational highlights of where we are right now. The previous team sold Cal at the end of the calendar year last year for £27.4 million. We're reporting today a 400 million. We're reporting a 400,000 EBITDA for our underlying for the business overall, and e-conveyancer we are estimating at 3.1 million on a standalone basis. We have 24 million in the bank at the end of the period, and we delivered just over 55,000 instructions in FY21. And FY21 was really a sort of a game of two halves. On one hand, we had We had a suppressed sort of first half with the lockdown, and as the world sort of reopened around this time last year and the housing market spun back into action, we had a very strong second half for both instructions and completions. And John can talk in more detail about that as we get to the financial highlights. We're starting seeing the good delivery of our strategy in Digital Move. We have given back what is worth of 800 days back to conveyancers in terms of onboarding and administrative time for those using Digital Move. We had a 21% growth in active advisors, those introducers giving us at least one case every 3 months. And to date, more than 50,000 cases has gone through Digital Move. Real sort of proof point of conveyancers enjoying the experience. And as I talked to at the top of the call, we have a new senior team on board in the business. So let's just remind ourselves who we are and what we do. So first of all, we are a consumer-focused technology and services business operating one of the leading price comparison websites for conveyancing in the UK, sitting between the consumer and finding that right conveyancer. Our technology brings together people buying, selling, refinancing, moving their homes, and Digital Move is making that a better experience that's more transparent and more efficient, starting with a digital onboarding. The first iteration of Digital Move, onboarding customers and helping keeping the customers up to date with what's going on in their case, but we can do so much more. And our mission is really to become the leading provider of digital tools and services which transform the experience of buying and selling, owning property, remortgaging property. There's no question that the way the world is moving needs to change. Our vision to make home moving and ownership a better experience for everyone, that's for sure. So let's keep going and just remind ourselves of where we are from an e-conveyancer perspective for those of you who haven't engaged with our business before. As I said, we bring consumers and legal professionals together through a market comparison experience delivered on our technology platform. And on sorry, I'm getting a lot of feedback, but I'll keep going. On demand side, we are seeing consumers being introduced through predominantly mortgage brokers, lenders, and B2B2C websites. And on supply side to the platform, we have conveyancers, and in the middle, they obviously compete for the business from the consumers based on price, sometimes location, certainly service rating, and the type of case that the consumer is looking to transact through the system. We have now helped more than 800,000 consumers move, buying, selling their home, remortgage their home. And we've done that through a large panel of conveyancers, as I talked to before. And consumers in the industry likes us. Only last week did we get recognized as the Mortgage Conveyancer of the Year at the Money Age Mortgage Awards, beating off competitions such as ONP, Sort Refer, the Moving Hub and Healy's. Solid competition, and really nice to see us sort of being recognized for that. And that is one of the strong building blocks that we have as a business. So let's turn to the strategy, and I've already alluded to it in my opening remarks. The home moving experience is broken. We sort of hear consumers, and these are real quotes, sort of saying, the amount of paperwork was just overwhelming and repetitive, or I don't get why I had to complete the same thing over and over again. I've already here, the paperwork, I already done that with the lender. Conveyancers too are not happy with the process. Talking about how most of their day, as I trailed up front, I spend responding to inbound queries. 30 to 70% of the day, or as this quote from a conveyancer says, over 60% of my day is responding to customer and stakeholder questions. Things that we can solve through by using events to drive great notifications for all stakeholders. And really what we have to think about, the real challenge we are solving against is sort of, on one hand, we have consumers that go through this incredibly infrequent. People are not moving every day. It's much less infrequent than going buying groceries or ordering something on an online mobile app, or indeed getting a ride share. They're not used to that experience, and it's very opaque. It's not transparent. As a result, and couple that with the sort of high-risk nature of the transaction, the high value of the transaction. In the middle, you sort of see high risk, perceived high risk, I should say, anxiety, stress, and that's the real opportunity we have. Help people have better visibility over how they move their home, buy, sell their property, or refinance their property, and help conveyancers be much more effective and giving time back to them. So the opportunity that we see in the market is we value at 1.6 billion pounds, 475 million for growing our e-conveyancer business. We estimate the 475 being the totality of the market, sort of scaling up our current market share, really doubling down on e-conveyancing performance, as I said before, both through new and existing channels and relationships. We are optimizing our sales teams at the moment, making sure we have adequate resource to go open up those new channels, or indeed penetrate our existing clients further. We're also giving those sales teams and our service teams new technology, and I'm happy to talk about that a little bit later. Second, responding to the conveyancers' feedback of spending most of their day on admin and inbound chasing, we are building and on top of the onboarding that we've already built for Digital Move, and proactively have an opportunity to keep stakeholders more up to date. We'll introduce AI and data overall to build automation in that space, helping conveyancers do a better job. And three, a sizable opportunity in helping people move into their home. So the 520 million illustrates the estimated switching revenue for home insurance, broadband, and utilities such as gas and electricity. Now, I know this space incredibly well from my time to compare the market, and we can do really good job of helping people in a contextually right way as they move through their home moving experience. And I'll talk to that in a slide in a little while. We have strong building blocks as a business. In fact, we probably have a unique set of building blocks to build on. One, we have, as we just talked about, an existing and well-recognized, a trusted brand in e-conveyancer. We have long-standing relationships with conveyancers, with mortgage brokers, and other stakeholders in the system. And we now have a strong leadership team with domain-level experience and coupled with digital and technology experience. And we're building bench strength below those people. We have early success with 50,000 cases now having gone through Digital Move to date. And obviously, we are an independent company that is incredibly customer focused with a strong balance sheet. So let me start provide an overview of our strategy. One, as I said, we're going to double down on e-conveyancer, really building out demand profile on that. And two, we are going to progress on the early success of Digital Move, building the best home moving experience underpinned by data and automation. And as I said, it takes three sort of forms below that second category. One, a great consumer front end. Two, the conveyancing platform that I talked about before. And three, an opportunity to monetize the trust that we have built by building a better home moving experience through to cross-sell. So let's look at the first. We have a strong footprint in both the mortgage broker market, in banks and lenders, and in some B2B2C sites. In fact, we have as a output of our broker relationships, we do incredibly well in the first-time buyer market. But we have more opportunity, be it in the estate agents that I talked about before, in price comparison sites, in affiliates, That's the new channels that we can go address, and that's what we're doing by opening up more channels for eConveyancer. Moving to Digital Move in the first of the three verticals. We're building on our customer-approved sort of onboarding experience. More than 50,000 cases, as I mentioned, has now been handled by the first generation of Digital Move. And more than 70% of customers that go through the process score the experience either very good or good. Digital Move had been incredibly valuable to both consumers and conveyancers over the period running up first to the first Cliffhead event of the stamp duty holiday at the end of March and again at the end of June. We've handled about 6,000 cases through the system in the last 3 months, and there's a pipeline of more than 10,000 cases. We will build on this experience and we'll progress the Digital Move platform. Onboarding is, as I said, just the first step. We need to build notifications that are critical to success, eliminate that confusion, that chasing activity that's going on. We'll guide the consumer through the process. As an example, you've onboarded successfully. Your conveyancer is now going to go through the file and make sure that nothing is outstanding. Next notification, you're good. We're now working on your case. We have ordered your searches. Next one, we're missing this piece of document. Can you please submit it in this way? We're speaking to the other side about XYZ issue. Really guiding the consumer with full transparency through that whole moving process. And of course, we'll open up visibility to other stakeholders, making sure many people enjoy the visibility of that case and we can progress the transaction through faster. Sellers also can start the process early, and I'm really excited about taking this further into estate agents. Today, we have a lot of buyers on our platform, and we have an opportunity to build on sellers. And if sellers were to adopt a different approach of selling their property, maybe starting getting their paperwork together, getting the case together earlier, being contract ready as they go into the sale process, as soon as they've received an offer and accepted an offer on their property, they can hand over that case almost like a virtual DD file to the buyer, and the process will then conclude faster. So really shortening the process it takes to buy, sell, or refinance a home. Let's move to the next of the three verticals, automate conveyancing. So I'm so excited about this opportunity to help conveyancers provide a better experience to movers and a more efficient experience. What we're doing here is addressing a broken market where 50% of conveyancers have no tech or are not using what they have. Some are using paper, some are using Excel, some are using absolutely nothing. We are empowering the long tail of conveyancers. And to remind you, there are 10,000 law firms in the UK with about 4,000 active conveyancing firms. We are building on our Digital Move success, an integrated platform connecting all of the stakeholders, ensure everyone what's going on, as I talked about. We're not planning to build everything ourselves. We will integrate existing solutions. As an example, we won't go and build ID verification or anti-money laundering tools or document automation. We'll simply plug them in. What we will do is build the best processes and the best advanced workflows on top of it to make sure that the conveyancers are not only putting into the process as they typically talk about, but they're also taking out from the process. We're making it easier for them to do their work, and we're giving them time back through efficiency to help them be more customer focused and spend time on what they quite frankly are best at, helping people complete the transaction. Two, we are creating the platform from conveyancers with integrations to, for instance, lenders, to searchers, to the land register. So no need to go to another screen. It will be all in that one screen, and it will be automated. So we know that what the next step of conveyancing is, and we'll kick that off for the conveyancer. And obviously, as much as we can do for them is giving them time back to do something else. At the same time, will be eliminating human error or opportunity for human error and the manual processes that are associated with that. All of this will be built on advanced workflows, as I talked about, using data, using AI, potentially ML, to automate the manual, inefficient processes that are occurring today. And finally, extending our trusted consumer relationship by getting that better way of doing conveyancing, we will open up other revenue pools. And this is a space that I know incredibly well from my time at Compare the Market. We will start helping people. So using the example I gave before about going through the process and knowing what's going on and being prompted when you have to do something. As a buyer, you'll come up to exchange and you'll have to organize home insurance. At that stage, we'll notify you and we'll give you 3 or whatever many quotes that you can choose from. And it will be helpful to the buyer and it will be to the provider an incredibly hot lead because we know they're in market right at that moment. As people move in, we'll get them broadband set up, very important in today's world, of course. As people move into their home and having lived there for a couple of weeks or a month, we'll help remind them that they shouldn't stay on that expensive energy tariff, that standard variable tariff, but here's some great quotes on energy. And all of that will generate revenue, will monetize that trust that we build up through the better conveyancing or moving experience, and it will be valuable to everybody sort of participating along the way. As a result of this, we are really unlocking value in terms of transparency and efficiency for all stakeholders. For movers, we are increasing transparency and by that reducing anxiety that I talked about. We're making the home moving experience more frictionless, and we are making sure it's a fast transaction for them because we are automating as much as we can and we are getting documents ready faster. For conveyancers too, we're minimizing those manual processes as I talked to. We're increasing productivity, eradicating chasing activity and eradicating inefficient admin. And we're improving their customers, the conveyancers' customers' experience at the same time. As you can see on the slide, we're building value, unlocking value also for brokers, lenders, estate agents, and others as well. So let's look at the business model as it is. We are absolutely not changing the business model for eConveyancer. It works incredibly well through a platform fee and also revenue for from attachments to that, as such as searches. We expect that a subscription model is going to be the right way to approach the business model from both the consumer front end into estate agents, as we talked about, as well as to the automated conveyancing platform product that we're taking to market. But as I said earlier, we're early on the journey and we'll validate that as we build go-to-market plans. Fourth, we are going to take a revenue share and introduce a fee, maybe a one-time fee, maybe a drip fee for the products that we cross-sell into cross-sell into consumers, my bad. Looking at this from a three-step, three-phase journey to deliver the strategy and these ambitions. This year, we are building and validating, we are engaging with stakeholders, we're building MVPs, we're taking them to market, and as I said, validating the revenue and pricing models. We'll start seeing revenue come through at the tail end of this financial year, and next year we'll grow both the conveyancer take-up with the focus on the smaller conveyancers, but also estate agent branches, and we'll refine and drive data optimized cross-sell. And in year 3, we expect to scale the experience and scale both the small and medium conveyancers and estate agent branches, expand into other opportunities along the value chain, as well as scale the cross-sell programs into other categories that I haven't talked about today, but some of these were mentioned on the slide early on. So with that, I'll pause and hand over to John for an overview of the financials for FY21.
Thanks, Jesper. So We've already talked about sale of Cal at 27.4 million was probably the big headline from the financials for the year. It's generated, a significant return. We bought it for 12.5 million only about 4 or 5 years ago. We received a reasonable amount of dividends in the period as well, so the net profit is quite high and and a good return, good multiple in terms of profits to cash that we received. Jesper's mentioned the strong recovery in H2 instructions. I'll talk a bit more about instruction and business levels in a minute. And we've been accelerating the investment in digital move, largely through operating costs. And we ended the year 24 million cash in the bank to enable us to execute our strategy, particularly through digital move. So underlying EBITDA of 400,000. It was down on the previous year. Obviously, we've been a COVID-affected year. The first couple of months, housing market virtually shut, which meant not only did we get very few instructions for the first couple of months, it meant that instructions that were in the pipeline, some of those disappeared. Some came back later on, but we did lose some. So a big impact on H1. Bounce back started in June, instructions accelerated. So as a tale of two halves. It was a market shift, quite significant. So most of you will be aware of the stamp duty deadline initially for March, and then split into two with a deadline in June and a deadline in September still to come. That's sort of making some fluctuations in the market, but overall has driven demand, but largely in the home mover. Most first-time buyers don't pay stamp duty at all. So it's been the rise of the home mover. Home movers are probably up on a pre-pandemic year, where first-time buyers are down compared to a normal year. For them, they're probably more impacted by furlough. They don't get the advantage of the stamp duty. They've been harder to get decent mortgage offers. Pre-pandemic, you could get 95% and certainly 90% loan-to-value mortgages. For a while, that dropped down to 85%, making it quite hard for a lot of first-time buyers to be able to get deposits together. Those mortgage offers have come back, and we're getting back to a more normal market. And also then there's the government Help to Buy scheme, which has come in fairly recently, which should also help first-time buyers. And we've had lower volumes through our lender channel. And on that channel, we're still not back to pre-pandemic levels. Banks I found it slightly more difficult to pivot in a digital world, so that they've been used to doing lots of appointments face-to-face in branch. They've moved to digital and telephone banking, and that has been slower to sort of move in terms of penetration for conveyancing, for us at least. But we still got the core e-conveyancer business, which, if we take away the digital move investment, both in terms of staff, etc., is still making a significant estimated profit for us. I'm not going to run you through line by line the financial statements. Just picking out the headlines. So the revenue and gross margin reduced, as we've sort of said, with slightly lower volumes. Admin costs rose because we kept investing in digital move despite the sort of fluctuating and background market. There's an exceptional cost which primarily relates to digital move. We've been moving digital move. We're in the process of doing this to a Salesforce platform. This is a sort of low code, no code environment. It allows it to roll out changes to digital move much more quickly. But from a technical accounting point of view, it means that we've written up what we previously capitalized. And then there's a gain on disposal for Cal, the accounting profit. And if I move through to the balance sheet, this is obviously substantially impacted by the sale of Cal. In particular, non-current assets are greatly reduced. We had goodwill and intangible assets arising on consolidation in the balance sheet, which were removed when we sold Cal. The positive cash balance of 24 million, obviously hugely up from the previous year, and we're now debt-free. And then to the summary cash flow, pretty much summarizing the previous two financial statements. We made a positive total cash flow from operations. The large inflow of cash for 26.4 million. The difference in the price is the amount of working capital and amount of money for corporation tax we left within Cal. It was a low capex year for the business. Working remotely, the business was well positioned to work remotely. We'd already kitted out the whole company with laptops prior to the year, which meant that we could seamlessly switch to home working virtually overnight. Repayment of the term loan and the RCF, you can see, and the 24 million at the bottom. I'll hand you back to Jesper.
Thank you, John. So let me summarize before we move to Q&A. We sold Cal for £27.4 million, leaving us 24 million at the end of the period in the bank. We saw a 21% uptake in growth of advisors using the e-conveyancer platform, those active advisors, praising at least one case with us over a 3-month period. And as I talked to early on, a new senior team. We are scaling demand across channels, including e-conveyancer as part of the strategy. We've seen 50,000 cases go through digital move to date, and we believe there is a significant opportunity, sort of the very macro estimation. The market is worth about 1.6 billion pounds in the UK across those 3 verticals that I showed earlier. And we have a opportunity to really build a customer-focused end-to-end property transaction platform that I've outlined today. Thank you.
That's fantastic. Yes, but John, thank you very much indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those investor questions submitted already, I'd like to remind you that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order the company can better understand your views and expectations. Yes, but John, perhaps before we move into some of the live Q&A, we did have a number of pre-submitted questions, and if I could just perhaps cut through a couple of these. The first one reads as follows. I know you have initiated a significant recruitment drive to expand the capacity and capabilities of the group. Can you please share with investors what capabilities you've been developing and what is your product development road plan?
Yeah, great. Thank you. Well, as I talked to some of the categories of people and bench strengths that we're adding, but we've certainly added people in our software engineering space and technology overall. And that sort of reflects also the shift that we have decided to take away from building everything ourselves to using some of the rails of Salesforce.com to accelerate our development. So specifically Salesforce engineers we have added. Also to direct actually what is the product going to look like. We've built up our product capability and actually from scratch built a product area that's now led by Jamil Delani. We build out on our data capability. And as we go forward, we'll build sales and support functions up to take the product to market as well. I think to give you a bit of context around that in terms of the recruitment drive. I think when I joined the business, there was about 90 people at ULS. As of this morning, we were 107. And we expect to take it to about 150 in the current year. Now, as I sort of trailed up front in my introductory comments as well, hiring is taking time, and we need to make sure we get the absolutely right talent, and the market is hot. That said, as John mentioned, we transitioned very well to a remote or a hybrid working environment. And that's helped us attract some of the talent that we need, that they don't necessarily need to be in Tame, Oxfordshire 5 days a week. So that's assisted to some extent. I think the presentation to the second part of the question was on product roadmap. I think the presentation should have addressed what are we actually pointing the existing and new hires towards in terms of strategy execution, both in e-conveyancer, but certainly also in digital move.
Fantastic. Thank you very much indeed, Jesper. The next question we've got here is, with your significant cash position, should shareholders expect to see acquisitions?
Yeah, as you probably saw from the deck, but let me be more specific. We haven't built the strategy on being acquisitive. We'll continue to look at businesses that come our way, and we'll continue to scan the market for likely businesses that will be of interest to accelerate our strategy delivery. But we're not sort of looking at big acquisitions drive. I can see us doing acqui-hire to accelerate delivery, but it's not the cornerstone of our strategy at all.
Fantastic, thank you. And perhaps now we could just jump onto some of the live questions, if you wouldn't mind.
Sure.
Jesper, John, if you just click on the Q&A tab, if you wouldn't mind just starting at the top there, and just where appropriate to do so, read out those questions, and of course you can review all of these post-meeting if we don't get time to cut through all of them. Thank you.
Yeah, that's helpful. And I don't know how it works, but can people unmute themselves and ask questions as well? And please do that.
It's just all text driven. So basically, if you could just read out the question.
That's how much I know the platform. But
we're always learning. Thank you, Jesper. Thank you.
So first, there's a question here on digital move, and it says, today I looked at the reviews on Trustpilot. 70% rated the service bad or poor. Admitted they were not a lot of reviews. However, what are your thoughts on this, as it does not tie in with what your management are saying? Also, there was no response from the company, which I think never looks good. Tony, thanks for your question. We haven't deliberately claimed the Trustpilot page. As you probably know, Trustpilot is open to anyone that desires to put a review on, unlike the more closed and accredited FIFO network, as an example. We take feedback incredibly serious, and it's being built into how we are developing the product. And we're certainly seeing 70% of, actually in excess of 70%, scoring the experience that they have with digital move, people that's actually been through the process, as very good or good. Now, I'm not dismissive at all. Please don't take it that way. I get that some people have bad experiences, and I want the team and myself to understand what the experiences are and what is behind them, so that we can become better and we can build products that are better addressing the customer needs. So we will look at Trustpilot and other review sites in the future, but it's not something we've done today. And as we scale the business, put the right rails in, we'll also make sure to respond to reviews as they come up. The second question from Richard is, who are your main competitors in relation to digital move? Do you have any plans with the significant cash pile you're sitting on other than digital move and acquisitions ? So I think I've answered the second one on acquisitions just a moment ago. As it relates to main competitors, I think I mentioned sort of up front that there are competitors out in market that are either trying to solve a sliver of it from a agent perspective, or a sliver on it from a conveyancer perspective. In fact, there's some conveyancers that's building their own sort of digital front end. What we haven't seen is anybody doing it end to end and truly sort of looking at it from a customer lens perspective and finding ways to do it. We're not going head to head as part of this with the likes of Rightmove, Zoopla on the market, or anybody else. In fact, that may in itself represent an opportunity to get access to sort of more traffic. We're seeing a very sort of nice flow of traffic coming from our e-conveyancer platform, and I don't think I mentioned, but in excess of 90% of e-conveyancer cases are now digital move enabled. So we're getting good traction sort of in totality for throughout the platform, the ecosystem. The next question is from Will H. In May's trading update, you were able to advise the market that trading was ahead of management expectations. Today's final said little on how the business is faring 2 months later as compared to those expectations. Could you please give us a guide, for instance? Is business trading in line with those revised management expectations, as an example? John, do you want to talk a little bit to current trading and expectations?
Yeah, so in terms of the May trading update, we were talking about the expectations for the previous year. I think we exceeded substantially, and I think even from our interim results would have been the previous announcement, we were ahead of where we expected to be at that front. We're not there are no forecasts in the market, so these are, we've got internal budgets and stuff which aren't translated through analysts' views of us in the market, so it's slightly difficult to do this. It's a fluctuating market, partly because of stamp duty deadlines, etc., and as well as the general environment with COVID and all the impacts on the economy. But in terms of where we were thinking we were a couple of months ago, we are pretty much there, maybe slightly ahead of where we thought we were going to be a couple of months ago. But that's how much use that is to you, I'm not sure, because you don't know what we thought in the first place. So it's, but yeah, we're not seeing any particular bumps in the road from where we were looking at 2 or 3 months ago.
Thanks, John. Let's move to the next question, which is, how competitive are you? And I expect you're referring to eConveyancer, because to continue, Darren, your question says, I needed this service not long ago. You didn't show up anywhere in searches. I used Sam Conveyancing, who got me a great quote and very good service. The lawyers weren't great, but they really chased them down for me and kept everything on track. So first of all, congratulations on your home move. I hope you're sort of settling in. If it's anything from my move, there's still stuff to do, but there we are. Listen, we're allowing our competitors to flex prices up and down to represent where they are. We also have fixed price services on the panel. It is fair to say if this was a couple of months ago, then prices would have inflated for some conveyancers, representing how busy they were and how little capacity there really were. We are very clear that we provide great lawyers and great solicitors that's going to get your case over the line with minimal risk to you. So I'm not going to comment on some of the competition, and I'm sorry you didn't have a great conveyancing lawyer sort of helping you go through your case. But we believe we are competitive. I also can say that prices have certainly been spiking more so over the sort of race to stamp duty holiday, both at the end of March and most notably at the end of June. And there's a lot more capacity in the system now than there was if we go back 30 or 60 days. There is now, so the next question is, how will ULS compare with the Australian company PEXA, part owned by Link Group? So PEXA, I think, has done a great job in the Australian market, partly helped by the infrastructure that the Australian government has created for transactions. And looking at that for inspiration, I think we can only do that with Envy being a home mover in the UK. It's much more digital, it's much more integrated. And some of those learnings we are certainly discussing with some of the, say, government departments and institutions to try and bring that conversation forward. We have a very fruitful and engaging conversation with, for instance, the Land Register, thinking about some of those experiences, including how do you not do the same thing over and over again, go through ID&V or AML checks, but complete that once, and that then carries through the case handling. So we compare on some points. I would love to be able to close home moves as fast as the Australian market. I think we will have to probably arm ourselves with a little bit of patience, and that's not good for me. I'm typically incredibly impatient, but there we are. But Louise, thank you for your question, for scaring the market. Next question is, The market revenue opportunity that you have highlighted on slide 14, which I believe is the 1.6 billion of total value in the market, is that net to ULS based on existing and future market share targets? We're not setting any targets or sharing any targets today. We have an internal plan. The 1.6 billion of opportunity was explained or contextualizing the sort of overall value there is in market. And as I also said, I believe that by building a much better way of home moving and much better way of doing conveyancing, we have a real crack of being able to eat into that and build a very credible market share position. I'm deliberately not setting targets or putting stakes in the ground today, not before we sort of have gone a little bit further down the path, and then we'll be happy to talk to, I suspect, first non-financial KPIs and following that targets as well. Next question was, and thank you for all the questions, by the way. John asked, Jesper, can you give us what are your 1, 3, 5, and 10-year targets? Just to the point that I mentioned before, we're not setting targets today. So the answer to that, John, is going to have to wait a little bit. Another question from John is, realistically, can you give us an indication on your thoughts around the time to scale up and particularly getting to critical mass? Excuse me. We are expecting to show revenue, early revenue in the current financial year, as I said, grow next year and then scale. And as I said, I'm also quite impatient, and I think we have a lot of firepower, both in our existing building blocks and the natural flow of traffic we're getting through eConveyancer to truly scale up digital move. And my strong belief is as we build a great product, then that great product is going to be adopted by market, and we'll certainly put sales and marketing effort behind that scaling. John, maybe a time for me to ask if you have anything to add to sort of scale and with your experience with the business.
No, I think that's right. You sort of on your earlier slide, you laid out the sort of 3-year plan. Within that, we think there's a long runway ahead of that 3 years, but we expect to have made dramatic progress within that 3-year period.
Yep. And maybe the next question for you as well, John. I think you can explain that well. So can you just explain in more detail why you benefit from first-time buyers more so than remortgaging?
Yeah, so we benefit more from first-time buyers because the fee purchasing or selling a property is more complicated than a remortgage. It's a much quicker process, so that there's more fee for us to get. But also we get to cross-sell more on a purchase case, which a first-time buyer is. So typically, if you're purchasing a property, you need to do property searches, such as environmental, water, drainage, local authority, and we're able to cross-sell those, which gives us a second revenue earning opportunity, and that will carry through for digital move as a whole.
Thank you. And I think there's another question on first-time buyers saying from Gary, thanks Gary for the question, how will you begin making first-time buyers more aware of digital move as an option? We are, as I said, there's natural flow coming through from our introducers in eConveyancer. And I think I mentioned before that in excess of 90% of the cases that go through eConveyancer now are digital move enabled. So the vast majority of cases that, or solicitors that's on the panel, uses digital move in its first iteration to digital onboard customers into the first step of the conveyancing process, and we'll obviously continue to operate on build on that. Hence why first-time buyers should, by nature of our introducer and the strong sort of mortgage broker introduction for first-time buyers, should be aware of the product. William asked, is there a non-compete with Cal? Are you planning to move beyond a first-time buyer focus? And if so, how? So there is an element of non-compete, I believe. But John, you were part of doing that deal, so you're probably better placed to give any visibility that we may want to give on that.
Yeah, well, effectively, eConveyance and Cal worked in the same market and under our ownership competed to a degree. So it's not possible to then say that they don't compete. So I think that sort of covers that point. There was already competition. You can't stop the competition. And I'm not sure we would even be allowed to if we wanted to do so.
I think also that we still have a relationship with Cal, right, and the Cal's owners. So we'll continue having that relationship.
And
anything else on that, John? You look like you have an additional point.
Just on the first-time buyer focus. I mean, we have a first-time buyer focus because we get a lot of our work through mortgage brokers, and they tend to have a lot of first-time buyers. Whereas home movers, generally get sold conveyancing by estate agents. So they might use a mortgage broker, but they've seen the estate agent first, and often that's where the recommendation for the conveyancing comes from. Sort of Jesper outlining the digital move strategy, where we're going to be sort of selling through estate agents and through conveyancers, means that we'll be widening our network and who we are exposed to greatly.
Thank you. I think we have time maybe for one more question. So Andrew asked, most of the company's relationship is with home buyers, is through mortgage brokers, estate agents, introducers. Does the company need a more direct relationship with the home buyer in order to sell follow-on services such as broadband, utilities, insurance? So that's a great question, and maybe I could be more explicit about our cross-sell opportunity. There's certainly going to be introducers that already have very good programs in place where they're helping customers with their insurance needs. Example, some of the banks that we have as customers do have insurance arms, and will certainly try and build attachment to the lender's product that they sell. I think either we won't sell to those as we bring that live, or will be the sort of second pick up the cherry sort of thing, and see if we can convert them into a sale. The one thing I'd be very clear on is the worst that could happen is that we all try and cross-sell to the same customer. It's confusing, it's not a great customer outcome, and we certainly wouldn't want to be in that position. So we'll take our time really understanding how we best land the cross-sell activity without it being conflicting. And as it relates to the sort of direct customer relationship, as customers come to trust Digital Move, we'll very happily have an ongoing conversation with them. There's content driven, and by that, building up a longer customer lifetime value. You can, for instance, see us understanding when they moved in and what their sort of setup was of their home, and in time, we can probably bring value back to them in some of those services.
Yes, but John, I was going to say, you've been so kind with your time. You've answered so many questions. Unfortunately, everyone you answer, another one keeps appearing. But we are coming up to the hour mark. I would like to remind the attendees that the team will be able to review all your questions, so thank you so much for submitting them. But just on that basis, Jesper, may I just ask you just for a few final words just to wrap up, just before we close and get you some feedback?
Yeah, great. Thank you. Well, first of all, thank you everyone for joining. As you can probably feel, I'm extremely excited about the opportunity we have ahead of us. I think we have a great base in our existing business that sort of builds a nice traffic, nice demand, nice natural flow through to Digital Move. We've achieved some really good milestones in Digital Move so far, but there's so much more to go at. And that opportunity is what makes me excited about really building a better home experience, both for consumers, but also for conveyancers, and giving them time back to do their job more efficiently, and eradicating noise in home moving. But thanks again for joining. We'll try and get answers out to the questions where it makes sense. We'll look forward to seeing you at a further update.
That's fantastic. Yes, but John, thank you indeed for updating investors today. Can I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. On behalf of the management team of ULS Technology PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you.